Coming up on the program, Fitch downgrades Ghana's creditworthiness to deeper junk status, assigns restricted defaults to government bonds. And South Africa's annual consumer inflation has slowed for a third month in a row, decreasing to 6.9% in January from 7.2% in December. Plus, more Kenyan banks affected as Delaware stops printing checkbooks. Hello and welcome to the program. I'm Ladi Williams. First off, let's see what's happening with African markets now. We see it's mostly positive sentiment right here in Africa, but we see the NGX there having a minor pullback at intraday. Same as we saw yesterday. It's down 0.04%, but we still had a bullish close yesterday. So going by what we see right now, it might change before the close of trade today. South Africa there, that's up 0.22%. Let's look at other parts now. Egypt, they're up 0.79%. Quite convincingly positive at intraday at this time. Obviously, Kenya closing negative again, down 0.13% yesterday. Now, let's get a sense of what's really happening at intraday on the NGX right now. Joining me is Mr. Rotimi Fakaejo, stockbroker at the NGX. Great to have you on the show. Good afternoon.
Good afternoon.
So last I checked, it was down 0.04%. What's the sentiment right now, and what stocks are moving the market at this hour?
The market, with the way it is right now, is quite very stable, and I think with the trend we are having, there's really nothing responsible for the downward trend. The market's breadth still remains positive in spite of the 0.04% that we saw earlier on. But I still believe that definitely with the way things are, we may not see it continuing that way. There's every possibility that the negative position now will be reversed.
And I did get inflation data for January just a moment ago for Nigeria, and it's at 21.82%. It's big, and I'm sure that was expected with all that we've been through in January. So we got our inflation data for January, 21.82%. How do you think this is going to impact the market today?
I think this has always been around us, and more devastating is the effect of the no Naira or non-availability of the new Naira notes. So I think this definitely may not have as much impact, as we believe that strongly with the way things are, the inflation trend definitely has been priced into the market, and we may not really see as much effect as it were. So from my own opinion, I believe that the market still remains resilient at this time and still has a lot of potentials for investors to go in and actualize good return.
All right, Mr. Fakaejo, I'll be looking forward to the close today, because this is actually a really big number. We'll see how the market reacts at the close of trade today. But let's talk about the printing and packaging stocks listed. I see Triple G. That's been regular on the top Guinness counter for a while now. What's happening with printing stocks on the exchange?
I think basically we do know what happens here and there, but it is unconfirmed. Whenever we have election period coming around like this, one or two companies do get contracts to print election materials. But I'm not confirming Triple G has gotten that. But with the trend that the company has maintained in the last 1 year, having paid 6 kobo dividend in the financial year ended 2021, I believe strongly that investors are looking forward to a better return this year, and they are quite positioning in that direction. But all in all, there is always something pushing that may not really be open as at present. But I believe that whatever it is definitely going to be made public very shortly. But I think from the financials of Triple G, definitely is a stock to buy based on the fact that the dividend return is quite appealing. on their last financials.
And definitely, we've seen a flurry of your Q4 earnings and a full year for 2022. Anyone standing out for you at this time?
Well, I think we, with the ones that have come in, the big ones are still not yet here. So I still believe that by the time we get the big ones, it definitely will turn things around for the market. But for the few ones that we have seen, they are not disappointing at all. They've really met up to expectation.
All right, I'll definitely be watching out for all of that. But what are you seeing for close of trade today?
Well, I think from, like I said earlier, it's unlikely that the negative position may close the market. So we may see a possible turnaround as investors put in more fund and the expectation still remains very high. So I still believe that we'll see a turnaround before the close of the market. And it may not really be big, but definitely is quite looking positive by the time we'll be closing the market, the trade for today.
I'll definitely be looking out for that. Any stocks on your radar at this point that you're watching closely?
Well, I think for me, the banking stock still remains the take of the toast of any investor at this time, because for majority of them, there is a promising return of at least about 10% dividend yield. So for me, that is quite heartwarming, and it's something that I believe investors should not miss out on. So for the banking sector stocks, I believe for the majority of them, I believe that they will do at least a good dividend yield in the neighborhood of 10%, at least for about 80% of the listed stocks on the exchange. So I think probably that these are the stocks that investors should really look at for now.
Be looking out for all of that. Thank you so much, Mr. Rotimi Fakejo, stockbroker and NGX. Thank you for your perspective today.
You're welcome.
Yeah, and I did mention inflation data for January, and it's breaking right now. Nigeria's headline inflation rate rose to 21.82%, picking up from the 21.34% decline recorded in December 2022. The January 2023 inflation rate showed an increase of 0.47 points against the December rates. On a year-on-year basis, the headline inflation rate was 6.22 points higher compared to the rate recorded in January 2022, which was 15.60%. On a month-on-month basis, the percentage change in the all items index in January 2023 was 1.87%, which was 0.15 points higher than the rate recorded in December 2022. According to the figure, on average, the general price level was 0.15% higher relative to December 2022. The percentage change in average CPI for the 12 months ending January 2023 over the average for the previous 12 months was 19.36%, showing a 2.49% increase compared to 16.87% recorded in January 2022. The contributions of items on class basis to the increase in the headline index of bread and cereal was up 21.67%, actual and imputed rent 7.74%, potatoes, yam, and tubers 6.06%, vegetables 5.44%, meat 4.78% on a month-on-month basis. The percentage change in the all-time index in January 2023 was 1.87%, which was 0.15 points higher than the rate recorded in December 2022. Quite a big number there. I'll be obviously watching how that impacts the next MPC meeting. We still have another one coming for February, so obviously we don't want to see another red-hot inflation data. We'll be drilling down on all those details later on. Let's move on to the Middle East now. We see it's squarely mixed sentiment there. Abu Dhabi, that's down 0.56%. In the UAE is negative sentiment. That's also, we see Dubai index, 3,456 points. That's down 0.08%. Still within the region, Saudi Arabia up 0.21%. And the Qatari index over 0.5% at 10,449 points. So not looking bad right there. Let's move on to Europe now. The European Court of Human Rights has ruled in favor of a former employee of accounting firm PwC. Says in 2016 conviction for leaking data about Luxembourg's tax deals with large corporations violated its right to freedom of expression. To talk more about this now, we have Kate Ferguson right there in Berlin. Great to have you, Kate. So please remind us, what was this case about exactly?
So this case centred around information that came to light in 2014, and it was about how some of the world's biggest companies were using bases in Luxembourg to avoid paying tax. Now, that was the result of a huge investigation spanning many countries, led by the International Consortium of Investigative Journalists, and it relied on leaked data from the accountancy firm PwC. Now, one of the former employees who passed information on to journalists was a Frenchman named Raphaël Allais, and back in 2016, he received a suspended sentence and a fine for leaking files from PwC. Now, at the time, Luxembourg judges ruled that the disclosure of the documents had caused the company harm and outweighed the general interest. Europe's Court of Human Rights has now overturned that ruling, and overnight, Raphaël Allais has gone from being branded a criminal to a whistleblower, so quite the transformation there. And delivering the decision, the court said the original ruling had had a, quote, chilling effect on freedom of expression.
Quite a chilling effect there, but what impact did the Lux leaks have?
Well, what I should say is that part of the reason this case was so explosive was because these tax deals the companies were making with the Luxembourg government were actually legal. But the general public certainly didn't know about them, and the Luxembourg government kept them quiet. The impact was far-reaching. It prompted European Union regulators to expand a tax subsidy probe and to propose new laws to fight corporate tax dodging. Now, it also inspired further investigations on offshore tax dodging, such as the Panama Papers. And perhaps most importantly, it actually shone a light on how accountancy firms like PwC secured rulings from Luxembourg's tax agency that supported their clients in making the kinds of arrangements that allowed them to pay no tax.
All right, let's look at the markets now. What are European investors looking out for today?
So it's the UK economy that's in focus today, with investors especially interested in January's inflation figures. The expectation is that the Bank of England will continue to raise interest rates, this despite the fact that Britain is the only G7 economy that's forecast to shrink this year. It's a tricky time for Britain, which has also been facing a wave of public sector strikes recently. Now, further afield, a day after we got that US inflation data, investors will be looking out for retail sales figures. That will give them a good indication of consumer spending amid fears of an economic slowdown in the world's biggest economy.
Right, all eyes on inflation all over the globe at this point, and what the central bankers are going to do going forward with rates. Now, let's move on to the US. We see US stock futures slipped today following the release of January's hotter than anticipated consumer price index. We see the Dow Jones Industrial Average there, down 0.22%. Talking about the futures market, S&P 500, that's down 0.36%. The tech-heavy Nasdaq is also down 0.47%. So it's all about inflation right now. But let's get a summary of yesterday's close from our correspondent, Maria Bird.
Market closed mixed on Tuesday, as the Dow Jones was down by 0.03%. The S&P 500 was down by 0.46%, and in the heavy tech Nasdaq slightly rose at 0.57%. It is clear that the major indexes were back and forth all Tuesday afternoon after the release of the Tuesday morning CPI Consumer Price Index report, which showed that inflation increased in the month of January. This has many investors concerned about what is ahead for the U.S. economy in the weeks and months ahead.
Correspondent there, Mary Baird, giving us a summary for yesterday's close on the U.S. Wall Street market there. Let's move on to Asia. We see Asia-Pacific markets traded lower today after the release of U.S. inflation data. Still about the U.S. inflation data at this point. Came out hotter than expected, and we see the impact on Asian markets there. Nikkei, that's down 0.31%, all the way to the Shanghai Kospi bigger down there, 1.53% move down. In Hong Kong, the Hang Seng Index that fell 1.65% in its final hour of trade, and the Hang Seng Tech Index slid 1.13%, just as we have right there. So it's all about inflation now pushing, and investors are definitely wondering what's going to happen next with all this hot inflation data coming out hotter than expected. All right, let's hit on now the global commodities market. We see oil prices drop for a second day today. Brent crude futures slid about 81 cents to $84.78 a barrel, while U.S. WTI crude futures, that dropped 90 cents to $78.16. And in the metals market, we see spot gold there, that was down 1% to $1,835.80 per ounce after falling to its lowest since early January. On Tuesday, U.S. gold futures fell by 1% to $1,846. Join us now for analysis. We have Sunil Dixit, Chief Technical Strategist, SK Charting. Join us from Kolkata. Great to have you.
Thanks.
So what's driving sentiment with oil prices? We see last week Russia announced output cuts, but it looks like the market's unshaken by Russian output threats.
Yeah, and much has been discounted in the price prevailing in the market right now. As we can see, a technical weakness prevailing in oil since quite a long time. And if we look at midterm weekly charts, it shows 13 weeks WTI, US oil, has been railing under pressure and ranging between $83 or $82.50 on the higher side, and the lower side it is seeking support between $72 and $70. 13 weeks is a long time.
And obviously, looking at oil prices, we've seen it trending downwards since last year, 2022, after hitting those highs. What key levels are you looking at for oil prices? What are the charts actually saying?
Well, if we see prices on the year 2022, since the time July 2022, prices have broken below 100-day simple moving average, and since after then, it has not been able to cross that. So, looking at short-term picture, support is seen at $72 and $70 is a critical support, and on the higher side, resistance is seen at $82.60 and $83. Until and unless this range is broken, $10 to $12, no firm direction is found. And on the immediate basis, I think prices need to break above $77. Above $77, as long as the prices are sustaining above 77, we can expect a short-term spike up to, let's say, $80 or $82. And if the $77 minor support is broken, then look next to $74 or even $72.
All right, let's look at the metals market now. We did see there were indications that gold would have crossed the $2,000 mark by now, but we're not seeing that yet. What do you think is holding gold back at this point?
The strengthening dollar, I'd say. Overwhelming job numbers and industrial PMI, these things have been, helping dollar quite a lot. And as far as gold is concerned, dollar above 102.50, 102.50, above this level, gold will remain under pressure until gold breaks and sustains below 102.50. There is no bounce back going to happen above 1900.
And that means for that $2,000 level to be broken, what kind of news do you see coming into the markets to actually make that happen?
Well, technically speaking, I think gold will remain sideways with a downward bias for a couple of weeks, or let's say 2 months even. The bearish design can extend to, let's say, 2 months.
Because I remember
on the price front, gold needs at least 3 to 4 days and a week closing above 1930.
because I did remember
That's only going to help gold scale up to $2,000.
All right, we'll definitely keep watching out for those key levels because I remember in 2022, everyone was practically buying gold. There were indications that central bankers were also buying gold. So I'm sure all of that, adding to all that buying pressure we saw in the market in 2022. But thank you so much, Mr. Sunil Dixit, Chief Technical Strategist, SK Charting. It was great having your perspective today. Thank you.
Yes, sir.
All right, now let's look at some other stories now in West Africa. We see the international ratings agency, Fitch, has downgraded Ghana's creditworthiness to further junk status. It's in its latest report, Ghana said Fitch Ratings downgraded Ghana's long-term local currency issuer default rating to restricted default from C. It attributed the downgrade to the decision by government to embark on the debt exchange program and the recent default on local bonds that matured on February 6, 2023, and another one which is due for payment this week. So we see there Fitch downgrading their credit worthiness further into junk status. We keep tracking that, a developing story at this point. Moving on to South Africa now, we see their annual consumer inflation has slowed for a third month in a row, decreasing to 6.9% in January from 7.2% in December. According to Statistics South Africa, a drop in fuel prices is one of the biggest contributors to the lower inflation rate. The fuel price index declined by 10.5% between December and January. During the first month of the year, a liter of 95-octane petrol was 21 Rand 40 from 23 Rand 46 in December. The consumer price index declined by 0.1% between December and January. Meanwhile, the annual rate for food and non-alcoholic beverages climbed to 13.4% in January, the highest reading since April 2009. Annual fish inflation quickened to 13.0% from 10.4% in December, the highest annual inflation rate for fish since May 2009, when it was just about 14.2%. Vegetables also recorded the largest price changes, with potatoes leading with 15.1%, followed by cauliflower with 11.8%. And the disruption caused by the decision of banknote printer De La Rue to freeze its Kenyan operations has widened as more banks urged customers to stockpile checkbooks as they looked for alternative vendors. In the latest development, Citibank has notified its clients that De La Rue intends to cease printing checks for the bank starting April. This comes about a few weeks after Equity Bank issued a similar notice to its customers, giving those in need of huge stocks up to February 15th to make sufficient orders. The new development indicates spiraling effect following De La Rue's move to close operations in the country, which could face customers across the banking sector with huge disruptions expected before lenders get an alternative. And that's how your money performed. And those are the stories making the headlines at this hour on Business Incorporated today. Thank you so much for watching. I'm Ladi Williams. I'll see you tomorrow.